In this video, I'm going to show you how to handle fixed assets in new QuickBooks Online. So let's get started. So right now I'm on home page here. The first thing you want to do is create computer or fixed asset account in a chart of accounts. So that's the first thing you need to do, create new accounts for your fixed assets. So let's go to chart of accounts here. So from home page screen, so what I'm going to do is go to chart of accounts. So here is your company gear. Gear is right here. Click this one and create. Go to chart of accounts here. Okay. So although I have several fixed assets in here, I'm going to create a new one so that you can see it, how to do it. All right. So let's just say create new one here. Click new one. Okay. Here we go. So in this example, I have account number. So let's say you don't want account number, you just want to hide account number. So let's uncheck this box. Uncheck this box. So by the way, how to get the account number to show up in a chart of accounts. So right now, if you just do it this way, you'll see all the account numbers right here. Okay. So let's see how to get the account numbers to show up in here. So in order to do that, what you have to do is go to company gear again. So if you don't need account numbers, don't worry about it. So this is someone how to show account numbers in your chart of accounts. So go to company settings, and so go to advanced in here. So right here. So right here, chart of accounts, uncheck, it's off, check is on. So from the company gear, with the settings, and then go to advanced, and then chart of accounts. So that's how you select account numbers to show in the chart of accounts. Okay, so we already at the chart of accounts here. Let's create a new account here. Okay, so the category type is fixed assets right here. Category, this is the default one. So category type is fixed assets in here. Fixed asset, select fixed asset. The first thing you want to do is select the right type of detailed type here. Let's say they don't have a computer in here, so just select the closest one. Let's say machinery and equipment. Okay, so you just have to change the name in here. Just change that to computer and equipment. Okay, so now it asks you, do you want to track depreciation of this asset? So normally when you capitalize, when you create fixed assets, you do want to track depreciation to reduce the price of your fixed assets. So let's just check this one, track depreciation of this asset, and then they ask you, do you have original cost and depreciation? So this is for if you are if you already have fixed assets and you just want to move to this new account, you select something in here. Let's say the original cost, this is from your old books. You have $10,000 worth of computers. You already bought it, and you are depreciating it. You are transferring from old books to new books. Then you put in original cost in here. Let's say $10,000, and let's say the date is August 31st. So that's the date you transferring it. And let's assume your depreciation is also up to date, up to that point. Let's say the depreciation you have already expensed is, let's say, $2,000, and as of is also August 31st. Okay, so what this will do is it will create behind the scene entry for you. So it will show fixed assets $10,000 as your assets on your balance sheet, and at the same time it also will create cumulative depreciation on the balance sheet as a contra account to this fixed assets. So the net is $8,000. So this will be negative, and this is positive on the asset side, 2,000 negative on the contra side. So it's like $8,000 net cost, remaining cost. Okay. So what this will do behind the scene is it will, for this case, capitalize it. It will debit fixed assets and credit opening equity balance account. So this is automatic. QuickBooks will automatically choose opening balance equity account. Same thing for this one. Okay, so what does that mean? So normally when you transfer assets, you will also have some other assets, some other liabilities to transfer to your new accounting system. So you will have some sort of established balance sheet account. So when it's balance sheet, it's total assets, and then you on the other side you have total liabilities and equity. So you'll be transferring all the assets, all the equities, and all the liabilities, and so that will balance. So in this case, if you're just doing one per original cost for the assets, and then go along with the depreciation side, it's just one side of your total assets, and it goes to your opening balance equity. It will show some balance there, and at that point you also need to do the opening balance entries for the other assets, other liabilities, like bank account. You may have some bank account, so when you do the opening balance entry for the bank account, it also posts to opening balance equity account. And when you have some liabilities that you have borrowed money from the bank or from your you payable that you from your vendors, and some other liabilities, it also posts to opening balance equity. And you may have opening balance equity accounts, some other accounts, so it'll post to the same account. So when you do all those entries for the opening balance, then you will net out and you will become zero. So that's the whole idea. All right, so behind the scene, it will create the entry, and it's a journal entry type. It will just basically create journal entry. You won't see it here. I will show you how it will post uh, to the general ledger here. All right, let's save it here. The moment you save it, it will create 10,000 as your fixed asset opening balance, and then the accumulated depreciation as this one. All right, so save this. All right, right here. So 10,000 and 2,000 right here. Depreciation and original cost. By the way, this in new QuickBooks Online, whoever developed this didn't do proper testing. Normally in accounting financial reporting, you will want to see the original cost top and the depreciation here. So it doesn't work that way. So in this case, there's no way to sort it. That's the way it is. Depreciation first and the original cost. So there's a little kind of unusual here. So whoever designed this had no formal accounting training, I guess. Never seen balance sheet before, probably. So anyway, so this original cost, normally when you see the balance sheet, the original cost on top, and then depreciation, and then the net cost here. All right, so if you just look at the balance sheet now, as it is, let's go to balance sheet here. So the one we did is right here. This is the one we did. So cumulative depreciation, and the net is $8,000. All right. So this is the way it is. And what if you want this one on top and this one at the right below the original cost? There's no way to do it without assigning account numbers. Okay. So let's just go to the chart of accounts in here again. So just select show account numbers. As you can see here, we have an assigned account numbers in here. In this here, I already assigned account number. Here, I already assigned account number. See, as you can see, it's 15,002 for the original cost, 17,002 for the depreciation. So once you assign account number for these two, then it will flip. Okay, so let's just change it. So let's say we want to assign this account number 17,003 and 15,003 for this guy. So just edit. So account number is 17,003 for this one, and this one is 15,003. All right, as you can see here, this is the right order you want, but you have the account number in here. Let's go to the balance sheet in here. See, right now there's nothing in there. Let's just refresh this, see what happens. So now this one is on top, and then depreciation, and then you're also saying the account number. So if you think this account number looks ugly, then you want to remove it, then basically depreciation gonna be on top, original cost at the bottom, and that's the way it is, as it is. So there's not much you can do about it. So if you want to take this one out, all you have to do is show account numbers, uncheck this one. That's it. Now if you go to this balance sheet again, it's back to the same thing again. See, depreciation first and original cost. So the way I look at this is a bug, and whoever designed this, no clue how to do the financial reporting. So it's kind of not normal. So if you want, you can ask them for some feedback, send them feedback. Maybe in next revision they will listen to you. So anyway, now let's talk about the this is the one we did it from the opening balance entry. So let's see how it created journal entry. If you just click this one, $10,000, you will see right here. Just click this one, journal entry. So it automatically created journal entry. So right here, the computer equipment debit. So that's the one you added to your fixed asset, and then you went to the other side, went to opening balance equity. As we said, now it will show $10,000 as a credit opening balance, and when you do the opening balance transfer for other liabilities account, then the balance should net out. So in case it doesn't net out, then there's a problem with your balance sheet. You didn't post everything correctly, and then you need to talk to your accountant. All right, so let's look at the other one, and so same thing with the the cumulative depreciation as well. So you'll be so is it $2,000? So you'll be quite opposite to your fixed assets right here. So debit is the opening balance equity, and the credit is your cumulative depreciation. So it's sitting in here. So at some point this number should be 0. So when you do the posting for all the other liabilities and some other assets, the number should be 0 if you have a standing balance sheet when you do the transfer. Okay, so now go to chart of accounts. Now let's open another one. Okay, so now let's say you want to buy some fixed assets. How to do record transaction. So let's say you're buying fixed asset. If you're paying for it by credit card or debit card, any kind of credit transaction type, you just select expense. And if you're writing check, then you select check. And then if you're buying on terms, you're going to pay it later, so just select bill and pay bills right here. Let's just say on this one, so you're just going to use Chase credit card type to buy some equipment. So let's say you want to buy some equipment from A1 printer company. So this is the account you want to select. So the account for buying computer, you already open computer account in here. So all you have to do is type in computer. So it will show computer and equipment as fixed assets type right here, fixed assets type. So let's just say you bought it for $1,000 right here. And if you have class set up, then you can select something in here, like let's say overhead. And payment method, let's say it's a debit card, or I mean the credit card, let's say the Visa one. Okay, so this one, this entry will basically you increase your balance on your credit card. So just the moment you add $1,000, your credit card balance will increase. And if you select your let's say your bank account, it will just come out from your bank account. It'll be like a debit card type, like this, and it will show in your checking account. Okay, let's just say you're using your debit card, doesn't matter. Let's say checking account or debit card. Let's just say you paid by credit card. So right here, Chase credit card. Select say use Visa and save it. So save and close. Okay, so now if you go to the equipment right here, as you can see here, so we did a mistake in here. So we didn't select the account properly in here. See, it's in here. The original cost is supposed to be in here. See, right here. This is the heading account. There shouldn't be anything. So it should be only this account. That's where the original cost goes. So we'll click this one. Alright, so you didn't select the account correctly here. So here's the computer equipment, and then you have a sub account in here. As you can see here, that's the sub account that you want to select. So it's a heading account. You should never be using this account. You should be using just this one for buying, and for depreciation expense. So you should be using the other one. So this is the original cost one. Select this one and save and close. So as you can see here, now it's 11,000. So if you click this one, it will tell you, so the $10,000 from your original cost, that's the transfer, opening balance, and then this is the new one you just added. Alright, so now you created this one. So next step is, well, how to do the depreciation. Okay, for depreciation, you will need to write a journal entry. So you bought for $1,000 and you need to write a journal entry. Okay, so from home page, you need to select journal entry. So just click create plus sign in here, and the journal entry is right here. Journal entry is right here. Okay, so the account you want is depreciation expense. This is on the expense P&L side. So not this one, this is the cumulative on the balance sheet side. So you want the depreciation expense on the P&L side. Depreciation expense, expenses. Make sure it's expenses, not the fixed assets depreciation here. This is the sub account of this as fixed asset. So you want a depreciation expense account. So that's on the debit side. Okay. So you paid $1,000 and you want to depreciate your fixed asset at the time of service. Let's say you want to do it over 5 years. So that'd be like you know, every year it'd be like 5 years. So it'd be like 1,000. So 1,000 divided by 60. So you'll be expensing it 1,000 times divided by 60. So like this, so you'll be expensing it $16.67 every month. This is the debit side. Okay, and then on the depreciation, cumulative depreciation side, this is the contra account of it will hold all your depreciation expense as it will reduce your original cost. So this is the one you want. Depreciation right here. This is the one. Okay. You select that one. So 1667. Okay. And then so the moment you can select your class if you want. Like overhead or something like this. So you will have the class and location as well. If you have a QuickBooks Plus subscription, if you have Essentials or Simple Start, you won't have location or class. But that's okay. That's the way it is. So don't worry about it. I'm using QuickBooks Online Plus here. So location, let's say this is for San Diego, like this. Okay. So now the question is, do you want to do this every month for this fixed asset? And if you don't want to do it every month, there's a way to make it recurring in here. So it automatically post 1667 for next is 59 months or 60 months, the way you want it. So let's just say we want to make this recurring. All right, so let's just say template is for fixed assets, and you just give number, you have asset number, something. Let's just say this one is asset number 1001, and then this is the schedule one. So days in advance you don't want to do days in advance, you want to do the same day, then monthly, and on day of, let's say, first of every month you want to do it, and this one doesn't matter, any day, Monday, every month, 1 month. So starting date, let's say you want to do it from September 1, and then end date, so you just have to figure out by, so 5 years you got to figure out, it'll be, so you have to change the date in here. Let's just do for 1 year, and then you have to go back and change it. So let's do this. So 15, and let's say you want to finish it on, let's say, August. So let's do the August 1st. and then you want to do this September, starting September, and this is for 1 year. And if you want, you can set it up all the way for the next 60 months. So, so you got an idea. So 1667, it will automatically post to your general ledger. So save template, and it's done. Now, let's say, well, I don't want to do it for 1 year. I want to do it for 5 years. I just want to do it for 2 years, and after that, I want to talk to my accountant. So you come here. So here's your company gear. And as you can see under the list, you see recurring transactions. So as you can see, this is the one we created. So you just have to edit and then put the date in here. So just do the edit and then edit right here. Alright, let's just say we want to do it until 17. Do this, save the template. Now you can do it for the next 2 years. So that's how you do it. And once you look at it, then you'll see to the P&L. So when you go to P&L, you should see depreciation expense from next month now. So depreciation expense, it will show in here 1667 every month for this item only. And if there is another item, then you have to do the same thing or increase the one we created. Then you have to come up with the depreciation schedule on some spreadsheet. All right, so that's how you do it. And now let's look at it another way. Now you have to just pay the bills. You haven't paid the bills. Well, you already bought it and paid by debit card, so that's done. So now let's say you bought it, and then it's a big ticket item, and you bought it, and you have to take a loan from your bank account to pay for that equipment. So how to handle it in QuickBooks? So an example. So let's say you bought it for $50,000 equipment, and you got a loan from your bank, say line of credit or some sort of loan, and so the bank paid $50,000 to your vendor. So how do you handle that in new QuickBooks Online? Okay, so if you paid by credit card, so you know how to handle it. So if you wrote check, you know how to handle it. And if you just bought it on terms, you know how to handle it. Just bill and pay bills, done. So in this case, you're not paying by check, you're not paying by credit card or company debit card, but the bank is gonna pay for this purchase. All right, let's see how you handle it. So go to bill, just like regular bill, right here. Just think of this as a buying from one vendor, bill. Okay, let's just say you bought it from A1 supplier, and the equipment you're buying is still computer equipment. Let's say computer equipment. Remember, this is the one you want to use, the original cost one, not this one. Original cost. Let's say you bought some customized equipment. Equipment for your business, the special one. Let's say you pay $50,000. And if it's for a project, you can select class. We don't know, so just say overhead at this time. And this bill number is your bill number from your vendor. Let's say this 897 is your vendor bill number. You got an invoice. Alright, let's just say they want money in 10 days. That's fine. Okay, so save and close. Alright, so now you want to go back and look at that transaction again. Well, I just want to see, I want to make sure I created this correctly. Let's go in here. This is the recent transaction. It's right here. There's a little clock in here. Bill number right here. Let's click that one. So this is basically when you say bill, you created accounts payable. So you should see accounts payable due to A1 supplier now. All right. So let's go to reports, or you can just go to vendors in here, vendor center, and this is the one we bought. As you can see here, you owe $50,000 right here for this bill. Right here, the $50,000 we just bought it, so it's open. Okay, so now, so if you go to your aging, probably you'll see that as balance due as well. Yeah, right here, it's $50,000. Okay, so now you're gonna pay that bill not by writing check, not by a credit card. You're just gonna use loan here. All right, so let's go in here. So the one you want to use is the vendor credit one here, not bill, the vendor credit in here. Let's see what happens. Okay, the company is the A1 supplier, and the account we want to use is the loan account in here. If there's nothing in here, then we will create one loan account. Alright, let's just say this is the one you want to use. This is ABC Auto Finance. Then, well, let's create a new one here. We're just going to say something else, so let's create a new one. So you find out how to create a new loan account as well. Okay, so the loan one, the category is, let's say you're going to pay this in 5 years. It's long term. If you're going to pay it within 1 year, it's short term. It's right here. So we're going to use long term. We're going to pay in 5 years. All right. So long term liabilities, and let's say we got the loan, line of credit, from Chase, let's say. And don't use this one. Don't do anything with this one. So we're not going to worry about the account number. We're just going to create lines, this one here. All right, so, and $50,000 right here. And the class is still the same. We've been using overhead and location. All right, so let's say use the making the payment for the same invoice. Okay, so what this entry will do is it will show as line of credit on your balance sheet account, and it will also show as debit to your accounts payable to this vendor. Let's just make it save and close. As you can see here, this one is gone here. There's nothing here. All right. So if you go back to the balance sheet, right here, this is your balance sheet. Let's refresh it. You should see $50,000 balance due now. Yeah, right here, $50,000 line of credit from Chase. Okay. And now there's one last step you got to take. So let's go to the vendor section here, vendor section, and you just have to do some internal clearing stuff. Right here it'll say open bill, still one open bill right here. So if you just do the make payment, it's in and out basically. So in and out, the payment is 0. So you just have to do save and close. Let's do one more time here. So we want to see this, we want to make this one gone, paid, like nothing in here. So this one, make it paid. So just make this, make payment, the internal clearing here basically. So make payment. As you can see, it said balance is 0 here, but still saying an open bill because it's in and out type of transaction in here, in and out. So let's just save and close. Now it's gone. And now if you go to the fixed assets, you will see right here. So you added 50,000 in here, and offset to that one is this one, 50,000 here and 50,000 here, debit, credit. So that's how you handle if you have fixed assets purchase, paying, taking loan here. All right, now so if you now you got to set up depreciation for this one for $50,000. You do just like last time. Just go to journal entry right here, plus sign, other, journal entry. The first one is depreciation expense right here, not sub accounts or just depreciation, just the expense, your expense that goes to P&L. So it's $50,000 divided by 60. So you want to expense it over 60 months from the date of your service, the day you placed your equipment on service. Right here, 833. So this is depreciation 1. Number 1 for whatever equipment you buy, and the credit side is the cumulative depreciation 1. See the journal entry, they haven't made this the count section not wide enough. You can't resize it. You know, the description is so long, so we want to make sure it's in the right account. So we'll figure out if it's in the right account or not. All right, so save it, save and close actually, and you can put the location if you want. Let's say this is San Diego, and the class, let's say it's the overhead, and overhead like this. All right, and if you don't have location and class, that means either you haven't set up. If you have QuickBooks Plus online Plus, but if you have Essentials or Simple Star, you won't have these features. So save and close. So now we go in here, journal entry right here. So this is journal entry, And if you want to see it on your P&L, so all you have to do is go to reports and look at the profit and loss, and you should see the depreciation expense right here. $833 right here, depreciation expense. And we want to make sure, if you want to do the recurring, you just have to set up recurring right there for next month, or you want to do it every month because the amount could change. You want to, if you're going to maintain some spreadsheet for all the fixed assets you're buying, you can just do one journal entry. You don't have to do it one journal entry for one equipment, one item. So you can just do the one journal entry for the whole fixed assets you bought. So 833 is right here. If you want to make it recurring, all you have to do is right here, make it recurring. So since we already used the template 1, you just have to say number 2 for fixed asset or compute equipment and schedule. You can say how many days in advance, monthly, day, first, and the start date, let's say, is September 1, and the end date, let's say, it's 2015, August 1. So this is for 1 year, and save your template. So that's how you do it. As you can see, we went through step-by-step instruction on how to record fixed assets using various scenarios. So that should cover everything you need to know about fixed assets. And if you have other questions, just visit our website. That's newqbo.com. There's our website, newqbo.com. Thanks for watching.